The semiconductor industry has outperformed the overall market for numerous years, and it's not due to the overall semiconductor shortage. If we take a quick look at this 10-year chart, we can see the overall growth of the semiconductor and how it beats the overall index, the S&P 500, and the Qs themselves. So today's episode, we're going to take a quick look at 3 ETFs in the semiconductor industry that I enjoy and I believe investors should keep an eye on. In today's episode, we're going to start off with price action. We're going to take a quick look at the overview, some of their holdings, some of their expense ratios, and finally just my overall thoughts. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a free Discord, free newsletter, and a lot of great investing links. So let's just jump into it, right? First, the overall markets we're going to take a quick look at are the 3 ETFs are going to be the SPDR S&P Semiconductor ETF, ticker XSD. Then we're also going to take a quick look at the VanEck Semiconductor ETF, ticker SMH, and we're going to take a quick look at iShares Semiconductor ETF, ticker SOXX. And these are some of my favorites. There's numerous semiconductor ETFs out there. These are 3 I enjoy, and at the end of this episode, I'm going to share which one I enjoy the most and where would I invest in certain ones. Now I want to take a quick look at their overview. What are some of their holdings? What are some of their expense ratio? So let's kind of start off with the SPDR Semiconductor ETF right now. We can see gross expense ratio for this is about 0.35%. Not that high, not that low. In all honesty, I thought the SPDR's ETFs were a little bit cheaper in gross expense ratio. But 0.35 isn't that bad in my opinion. They have about 41 holdings in this kind of SPDR ETF, and we can see their top holdings make up roughly, I want to say 20 or so percent, 20 to 30, a little bit less than 30, a little bit over 20%, somewhere around 27, 28. Their top 10 holdings make up of their portfolio, and we can see the biggest holding only makes up about 3.06%. And I think that's very important to remember, and I'll explain why in a bit. All right, so the second one we're going to take a quick look at is ticker SOXX, and this one is an iShares Semiconductor ETF. Right now, we can see the expense ratio for this is about 0.43, so it's a little bit more expensive than the SPDR. The biggest difference here is the SPDR, which we previously looked at, had about 40-something holdings. This kind of SOXX has about 30 holdings, so it's a little bit more concentrated, and it's actually more concentrated in the positions it has, where SPDR, the top 10 ETF, the top 10 holdings made a little bit less than 30%. Here in SOXX, the top 10 make up a little bit over 55%, between 55 to 56%. And you can see some of these big players, some of the 2 big players have about 8.6% weight ratio. So you are a little bit more heavily influenced by individual players. But before we begin, let's take a listen to today's sponsor. I want to thank the Motley for sponsoring this video. Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Now the final one that we're going to take a quick look at is SMH. This one has an expense ratio of about 0.35, very similar to SPDR, so not that insane, and it has about 25 holdings. So this is the most concentrated amongst all of them, and if we take a quick look at their daily holdings, very similar to, I want to say, SOXX. Their top 10 positions make up somewhere roughly about 55 to 60%. So it's very, very concentrated amongst the first 10 positions. And we can see the biggest, even though it is kind of similar to SOXX in forms of position sizing, the top 10 positions are different. Where SOXX, the top 2 are Broadcom, Qualcomm, and Nvidia. Here in SMH, you have some of the big players like Taiwan Semiconductor, Nvidia, and Intel being the top 3. So now that we took a look at them, I want to share my overall thoughts, right? My overall thoughts on all 3 ETFs. I do believe they all have great expense ratio, nothing too crazy. The SOXX was a little bit more expensive, right? They had expense ratio of 0.43. I don't think that's horrible, right? SSD and SMH had about a 0.35. I do like them. In forms of which one I would pick, it would depend. If I wanted more of a big basket of semiconductors, I would personally go with the Spider semiconductor ETF. That is ticker XSD. If I wanted more of a concentrated type semiconductor, I would obviously pick between SOXX or SMH. Me personally, taking a quick look at the holdings, I personally enjoy SMH a little bit more because I do believe TSM is going to be a great player, Nvidia is going to be a big player, and those are the top two players here. In SOXX, they have Broadcom and Qualcomm as their top two. Those are great companies, but for me as an investor, I enjoy the other ones instead. So I hope you guys enjoyed this quick episode. Let me know if you guys are looking at some of the semiconductor ETFs, and if so, which one is your favorite. Take care, have a good day, and see you next time.